And now we will be practicing what we have learned in our earlier modules. The different measurement bases. We'll see how to calculate measurement basis, how to calculate value based on different measurement bases of an asset or a liability. So there is a scenario in which we have taken an example of an asset, okay, where a sample company, this is the entity of which you are accountant, all right, and your company has purchased a farmhouse for 100 million on 1st of January 2011. All right. Smart students would be at once saying, wow, this is the historical cost. Okay, let's see what is the historical cost. Okay, remember this. What is your answer on it? Well, its useful life is 50 years. All right. This is very important while calculating historical cost of an asset. And the farmhouse can be sold. Okay. It is its exit price on 31st December 2024, 250 million. It can be sold. Okay. Remember, this 31st December is the measurement date. Okay. This is the measurement date. And this is very important and specifically mentioned in the definition of fair value, which is the reporting date, in fact. All right. Well, whereas the same size and style of farmhouse in the same location can be bought for 260 million, on which 10 million will be incurred for its registration and legal fee. And we know this 10 million is the transaction cost, and 260 is the entry price, which is we are taking from the market, obviously. Okay. Well, the requirement is that we have to measure the value of farmhouse under the historical cost, current cost, and fair value on the measurement date, which is 31st December 2020, which is our reporting date as well. All right. So let's see what is the historical cost. Remember, 100 million is its transaction price, from which we have to subtract accumulated depreciation. Now remember, 100 million is not its historical cost. We need to keep updating historical cost for its accumulated depreciations. All right. So here the asset's useful life was 50 years. 100 million is its cost, and 10 by 50 will produce 20 million, which is its accumulated depreciation. Okay. So after subtracting accumulated depreciation from its transaction price, we get 80 million. This is its historical cost on the measurement date, remember. Got the point? Very good. Now let's see fair value. So fair value is in fact the exit price at which that farmhouse can be sold among the market. It is determined among the market participants in an orderly transaction on the measurement date. So this is the fair value, okay, on 31st of December 2020. Well, let's see what is its current cost. Its current cost is this 260 plus the transaction cost of 10 million, which is providing us 270 as its current cost. So we see there are different measurement bases which we can apply on a single information, can be an asset or liability whatsoever. Here in this example it was an asset. Well, very important point to share with you right now over here is sometimes क्या होता है कि we are presenting that information in the balance sheet at its fair value, तो हमें उसकी historical cost जो है वो डिस्क्लोज करना होती है नोट्स में एज वेल. एंड समटाइम्स अगर उसको हिस्टोरिकल कॉस्ट पे प्रेजेंट कर रहे हैं तो उसकी फेयर वैल्यू हमें डिस्क्लोज करना होती है नोट्स में. तो याद रखिएगा कि बैलेंस शीट में कोई एक आपको मेजरमेंट बेस को अपनाकर प्रेजेंट करना होगा उस फाइनेंशियल इंफॉर्मेशन को, एंड जो दूसरी मेजरमेंट बेस होगी फॉर अंडरस्टैंडेबिलिटी, फॉर कंपेरेबिलिटी, फॉर वेरीफाइबिलिटी और इन अ वे फॉर मेकिंग दैट इंफॉर्मेशन more useful for the user of the financial statements, आपको कोई दूसरी मेजरमेंट बेस की कैलकुलेटेड वैल्यू को नोट्स में डिस्क्लोज करना होता है. अगेन to make the financial statements useful for the users of the financial statement.